So many South Africans are under overwhelming pressure because of the interest rate hikes that have been imposed on South Africans who are currently homeowners, right? Since the end of 2021 until now, we have had like 9 consecutive interest rate hikes, which is a total of 425 basis points, right? So with the last one that came in March, which was 50 basis points, and which makes our repo rate become at 7.75%, and then the prime lending rate at 11.75%. So in this video, I want to break down how you can actually deal with this increase of the hypes. How can you ensure that you are not negatively affected by these hikes, right? So as you know, in this channel, we talk all things real estate, all things personal finance, so that you are the driver of a financial situation and not just the passenger, right? Where our interest rate is standing right now, the prime lending rate, where it's standing at 11.25%, it is the highest point in 13 years, which is since June 2009, which means that it is really one of the point in our lives that the cost of living is very high. As a consequence, consumers are relying on credit for everyday living expenses, which is not good. So also there's some feedback from the banks or in terms of impairment, right? Impairment is a provision held on a balance sheet or a result of raising of change against profit for impaired losses, right, arising in the lending book. So if we are going bank to bank, we look at Capitec, which has the highest impairment. They have 6.3 billion, which is an 80% increase from the previous year, which is 2022. And then Absa, which is the second one, has 13.7 billion, which is 60% increase. Standard Bank has 12.1 billion, which is a 22% increase. And then Nedbank has 7.4 billion, which is a 13% increase from the previous year, while FNB has the least, which is 3.9 billion, which is also a 39% increase from the previous year, right? And what this means is just means that the banks are seeing an increase on the number of customers that are not able to pay their home loans and other debts, which means that customers are getting more in areas and they're going into debt review, right? So the reason for this is that the homeowners do not have are not getting the salary increases that accommodate for these rate hikes on a monthly basis, right? Which means that in most cases, some people are struggling to pay their bond, which means that some of them are even deciding to sell their properties. The thing that makes it worse is that we are forecasting that there will be a 25 basis point increase in the 25th of May when the Reserve Bank committee meets again. Or it can even be another 50 basis points, right? This is due to the inflation that is actually not going down, because the inflation now it just moved from 7% going to 7.1%, right? And just to indicate how severe this situation is, you can just look at the increase of the monthly bonds, right? The increase on the monthly bonds. So if you are looking at, for example, a property that you bought, let's say you bought it in September 2021, or let's say you have a variable interest rate in September 2021 when the prime lending rate was at 7%, right? So let's say you bought the property for 750,000. At that point in September 2021, you would have been paying 5,815, right? But if you are comparing it to now, right, where the prime lending rate is 11.25% in March 2023, so which was raised in March 2023, you will be paying now 7,869, which is a 2,054 monthly increase on your bond repayment, right? And then if we are looking at another price range, which is say $1 million, you will be paying in September 2021 7,753, and then right now, if you compare to now, you are gonna be paying 10,493, which is a 2,740 increase, right? So this is how badly this interest rate has actually affected people in the economy. So, but does that mean that now it is gloom and whatever? Does that mean now we must give up and all that? No. There are things that we can do in order to deal with this situation, right? There's things that you can do to enable yourself to not feel the strain too much, right? So the very first thing that is very, very much basic is to track your finances or to budget, right? So when you're tracking your finances or budgeting, the important thing here that you're trying to do is to find opportunities to cut expenses and increase savings, right? Because if you have no visibility of your income and expenses and where your money is going, you will not really know which ones are useful and which ones are not useful, right? So because there's some stuff that you pay for, there's some stuff that you spend on that are really unnecessary. You can trim on those and actually ensure that you have some positive cash flow from your side, right? And another thing you can do is to think savings plus, which means that creating a second stream of income. Salary is not really a way to protect yourself in this regard. You know, there's so many things that you can do. I'm not going to dwell into that. You can find that yourself. There's so many things that you can do to develop a second string of income, right? And then the third thing is you can negotiate insurance premiums, right? So have you realized that the insurance people always want to increase your insurance annually, even if you didn't claim? I mean, you can talk to them that, okay, you have not claimed, say for a vehicle insurance, so you can convince them that, okay, you're a good driver, you have not claimed in the past year or 2 years or 3 years, so there's no reason why your premiums should increase. You can also look at other insurances that you are having. In some cases, we are over-insured for things that we don't need, but you need to look at of that. But does this change your whole situation? No. So all these little things that when they are added together, they make a very good difference, right? And another thing is you need to manage your debt, right? You need to pay towards your debt as much as possible, right? And you also need to think long term. You must not think short term, because all these things happen in a long term. So right now it's really difficult to say where the economy is gonna go. So, but you need to always make your decision on a long-term basis, right? So let's say if these things that I just said doesn't work, but I'm sure if you are following them to the T, it will work for sure. But say you can see that you are unable to pay your bond. The very first thing is you need to communicate to your bank that is giving you the loan, right? So that you can make other arrangements that are suitable for you, right? So Then the second thing is, after you have communicated with them, they will communicate with you back what are the possible arrangements you can make. So then you enter into a new agreement which now enables you to pay what you can actually afford, right? And then the other thing is that if you can see that the best thing is to sell the property, then you need to decide to sell it as soon as possible and not wait when it is too late, right? And then another thing to improve your situation is that you can debt proof your home, which means that if you are considering to buy, for example, you put a higher deposit so that you can have a good interest rate, and you will have a minimum installment that you'll be paying towards servicing your bond, right? And another thing is you can refinance and consolidate the debt. So refinance is a very good option, especially for those people that have been living in a property for a very long time and they've built some sort of equity. So what you can do is that instead of personal loan, credit card, and all the other debts are more expensive than a home loan. So now, if you're consolidating your debt or if you are refinancing, you can actually settle all the other debts and then just be left with the home loan, which will be very a good saving for you, because in terms of the interest rate, you'll be paying much less, and now you'll be paying only just one kind of a debt, right? Another thing is that you need to consider downsizing, right? Maybe you don't need the property that you are living in. Maybe it's just too big for you to maintain and all that. Maybe just consider to buy a small manageable property, right? I hope this serves you. If you have not subscribed to this channel, please subscribe. Please share this video with your friends and with your family. I hope this helps you. It is the big elephant. Ndo Kuria Manage. Chase, I'm out.